Something big is happening. The stock market, once the ultimate symbol of financial stability, is starting to show cracks. Investors who once trusted Wall Street without question are now second-guessing everything. Inflation, rising interest rates, and global instability are shaking confidence in traditional markets. Meanwhile, the crypto market is doing the opposite. It's exploding. Bitcoin is smashing through all-time highs, Ethereum and altcoins are gaining momentum, and major institutions that once dismissed crypto are now scrambling to get in. This isn't just another bull run. Something deeper is shifting. The financial system as we know it is evolving, and for the first time, crypto is emerging as a serious contender to traditional investments. So, is this the end of the stock market's dominance? Is crypto finally ready to take over? Or is this just another cycle of hype? The answer isn't as simple as it seems, and what happens next could change everything. Let's break it all down. At first glance, the stock market looks stronger than ever. Over the past 2 years, the S&P 500 has surged, delivering back-to-back gains of over 25%. Tech giants like Apple, Microsoft, and Nvidia have led the charge, pushing indexes to all-time highs. Investors, thrilled by the growth, have continued pouring money into stocks, believing the bull market will never end. But here's the problem. These record-breaking numbers don't tell the whole story. Beneath the surface, cracks are forming. Much of the stock market's growth has been fueled by Federal Reserve policies, AI-driven trading, and a rush of retail investors chasing momentum. The fundamentals? They're not as strong as they seem. Rising interest rates have made borrowing more expensive for businesses, cutting into profits. Inflation, which the Fed has fought hard to control, is still a lingering threat. And geopolitical tensions, from trade wars to global conflicts, have created uncertainty that investors can't ignore. The stock market might look invincible on the surface, but if you look closer, the warning signs are there. And while some investors are still holding on, others are already looking for the next big opportunity. That's when all eyes turn to crypto. Despite its record-breaking run, the stock market isn't as stable as it seems. Beneath the surface, major challenges are piling up, and investors are starting to take notice. One of the biggest threats? Interest rates. The Federal Reserve, in an effort to fight inflation, has kept rates higher for longer than many expected. That might have helped slow down rising prices, but it's also made borrowing more expensive for businesses. Companies that once relied on cheap debt to fuel expansion are now struggling with higher costs, lower profit margins, and slower growth. Then there's inflation itself. While some experts claim it's under control, everyday consumers aren't convinced. Prices on essentials like food, gas, and housing remain stubbornly high, forcing people to cut back on spending. And when consumer spending slows, businesses suffer. Retail sales are slipping, corporate earnings are under pressure, and investors are growing uneasy. But that's not all. Geopolitical tensions are also rattling the markets. Trade wars, supply chain disruptions, and global conflicts have made the economic landscape even more unpredictable. Investors who once felt secure in traditional markets are now facing a level of uncertainty they haven't seen in years. With confidence in stocks beginning to shake, many are searching for alternatives. And as traditional investments struggle, one market is thriving: crypto. While the stock market struggled with uncertainty, the crypto market was doing the exact opposite. It was thriving. Bitcoin, the original digital asset, surged past expectations, breaking new all-time highs and outperforming traditional investments. But this time, it wasn't just retail traders driving the market. Institutional investors, hedge funds, and even major corporations were diving in, fueling crypto's explosive growth. Ethereum, Solana, and a wave of emerging altcoins weren't far behind. Decentralized finance, DeFi projects gained momentum, offering alternatives to traditional banking, while NFTs and blockchain gaming created new digital economies. Suddenly, crypto wasn't just a speculative asset, it was becoming a cornerstone of the financial system. What changed? A growing distrust in centralized institutions, inflation fears, and technological innovation pushed investors toward decentralized assets. Bitcoin's limited supply made it an attractive hedge against economic instability, and with global adoption increasing, crypto was no longer a niche market. But the real game changer? Major institutions were finally taking crypto seriously. And as they moved in, it became clear. This wasn't just another market cycle. This was the beginning of something much bigger.
Are you looking to secure your cryptocurrency investments? Meet Ledger, the ultimate solution for protecting your digital assets. Ledger offers top-tier hardware wallets designed to keep your crypto safe from online threats. With products like the Ledger Nano S Plus, Nano X, and the new Ledger Stacks, you can store your private keys offline, ensuring they are out of reach from hackers. Unlike hot wallets, which are connected to the internet and susceptible to hacks, Ledger hardware wallets provide cold storage, keeping your private keys offline. This makes them immune to online attacks. Paired with the Ledger Live app, managing your crypto has never been easier. Buy, exchange, and grow your assets all in one secure place. The app supports over 5,000 coins and tokens, making it versatile for any crypto enthusiast. Whether you're just starting with crypto or are a seasoned investor, Ledger has a device for you. The Ledger Nano S Plus is perfect for beginners, while the Nano X offers Bluetooth connectivity for on-the-go use. For the ultimate in security and customization, check out the Ledger Stacks with its advanced e-ink touchscreen. Ready to take control of your crypto security? Click the link in the description to get your Ledger hardware wallet today and join the millions of users who trust Ledger for their digital asset protection.
For years, Wall Street dismissed crypto as a risky, unregulated playground for tech geeks and speculators. But now, the biggest financial players on the planet are diving in headfirst. Major investment firms, hedge funds, and even traditional banks are not just acknowledging crypto, they're actively investing in it. One of the biggest game changers? The approval of Bitcoin ETFs. These exchange-traded funds made it easier than ever for institutional investors to gain exposure to Bitcoin without the hassle of directly holding or securing it. Almost overnight, billions of dollars flowed into the market, pushing Bitcoin's price to new heights. And it's not just ETFs. Major corporations are integrating blockchain technology into their businesses. AI-driven crypto trading is on the rise, making markets more efficient and accessible. Even governments are exploring central bank digital currencies, CBDCs, signaling that digital finance is no longer a fringe movement, it's the future. With institutions backing crypto like never before, the lines between traditional finance and digital assets are blurring. But not everyone is happy about this shift. Regulators are scrambling to keep up, and their next moves could change everything. As crypto continues to explode in popularity, governments and regulators are scrambling to catch up. For years, the crypto market operated in a gray area, largely unregulated, decentralized, and free from traditional financial oversight. But with billions of dollars now pouring in, that's quickly changing. In the US, the Securities and Exchange Commission, SEC, has ramped up its crackdown, targeting major crypto exchanges and enforcing stricter compliance rules. New regulations aim to bring more transparency to the industry, but critics argue they could stifle innovation and push businesses offshore. Meanwhile, central bank digital currencies, CBDCs, are becoming a reality. Countries like China have already launched their own digital currency, and the US, Europe, and others are exploring similar options. While CBDCs offer a government-backed alternative to cryptocurrencies, they also raise concerns about privacy, surveillance, and control over personal finances. Despite the push for regulation, one thing is clear: crypto isn't going away. The question is, will tighter rules help legitimize the market, or will they slow down its momentum? Either way, the battle between regulators and the crypto industry is far from over. And as the dust settles, one big question remains: what does the future of finance really look like? The financial world is at a crossroads. On one side, the stock market is struggling to maintain its momentum, facing inflation, high interest rates, and growing global uncertainty. On the other, crypto is evolving faster than anyone expected, with major institutions, governments, and retail investors all getting involved. So, what happens next? Some analysts believe the crypto market is just getting started. With Bitcoin's growing adoption, Ethereum's advancements in smart contracts, and AI-driven trading reshaping digital finance, the potential for long-term growth is undeniable. If traditional markets continue to stumble, more investors could shift their focus to crypto, accelerating its dominance. But there are risks. Regulation, security concerns, and market volatility could slow down the crypto revolution. Meanwhile, the stock market isn't dead yet. Companies are adapting, new industries are emerging, and innovation within traditional finance could create new opportunities. One thing is certain, finance as we know it is changing. Whether the stock market recovers or crypto takes over, the future belongs to those who are paying attention. And the next big shift? It might be closer than we think. The financial world is changing, and there's no stopping it. For decades, the stock market has been the backbone of investing, providing stability and long-term growth. But now, cracks are starting to show. Inflation, rising interest rates, corporate debt, and geopolitical uncertainty are weighing down traditional markets. Meanwhile, crypto is surging, fueled by institutional adoption, blockchain innovation, and a growing demand for decentralized alternatives. So, what does this mean for the future? Some believe the stock market will bounce back, adapting to new challenges just as it has in the past. Others argue that crypto is on the verge of replacing traditional finance, offering investors a new way to store wealth, transact, and invest in the digital age. The truth? We're in the middle of a major shift, and the outcome is still unfolding. One thing is clear: those who ignore these changes risk being left behind. Whether the future belongs to stocks, crypto, or a fusion of both, one fact remains: the way we invest is evolving faster than ever. The question is, are you ready for what's coming next?
If you haven't already done so, visit our website. You will find the link in the description.